Uche, thanks for joining us today.
Thank you very much.
So let's start with just a brief recap of what we saw last week at the market. We saw the CBN mopping up liquidity in 3 separate OMO auctions, mopping up about 499 billion, but the system was still left with a lot of cash. Talk to us about that.
Okay. In the first place, we had the FAC coming, about over 300 billion. Then we had the number of maturities. And so when the central bank came in the first day, now we must understand that last week's reaction was coming from the last PMA we had where the entire yield curve shifted. So we had the 1 year move from 12 levels to 13.045 levels. And that signaled an almost knee-jerk reaction, right? So when CBN came in last week to have the auctions, we had the T-bill space. It was already a bearish sentiment, and then people just started selling off to try to correct correct the curve to the last PMA. And so when CBN came in and did the first auction, market expected effective 1 year was at 15. So everybody quoted 14, 15, just a handful quoted 12 at the long end. And then obviously they couldn't do anything at that level. They came the next day and it was the same thing. But they were able to mop up some stuff. And when they mopped up, I think about 100 billion or thereabout, then we started having a bullish sentiment in the T-bill space because people just felt this liquidity was going to be an overnight rate of somewhere around 2% or 3%. So at least you would to go and buy out. But the bonds market acted completely different. So we've had 2 weeks or 3 weeks of a running bearish market where we broke the 15 levels, got to as high as 15.4, 15.5 at some point.
I'm sure that must have been a big concern for the CBN.
Yeah, because it was a combination of what the FPIs were doing and the absence of the PFAs in the market. Yes. Because there were a lot of concerns that some of the portfolio investors were taking out their funds, and you will see that in the FX space. So the market just corrected to say, you know what, if I'm going to hold bonds right now, I want to break the 15 levels. And we broke the 15 levels. But then the T-bills did something completely different. So you had from Tuesday into Wednesday, and then Thursday, Wednesday, we had some bullish sentiment, so we had some correction because we felt that with the first 12.15 and the next 12.15, CBN was signaling that we're going to push this rate forward. But on Thursday, they came in and moved the curve to 12.5. And I think they had to do that to try and deal with the liquidity levels because we're way over 800 billion, almost 900 billion. So if they hadn't moved the rates, we probably would still have liquidity way around 700. But when they moved the long end, which is about the mid 183, 184 days, to 12.5, what that did was to bring back the bearish sentiment. Because again, the market trades on sentiment. So every time the central bank, either through the PMA or through OMO, move rates around, the secondary market must mirror that. Or else anybody holding the bills at that level automatically just gets hit by mark-to-market.
So it looks like things could be quite interesting this week.
It should be.
We're expecting to have more OMOs this week. And of course, the primary market auction. I'm just thinking, how is that going to play out? I mean, with investors, I mean, that pull between the CBN and, of course, investors looking to get, I mean, reasonable rates on both sides. How do you see that playing out this week?
I think we might have a mixed market. By mixed, I mean, you probably will have more bullish runs around the mid to the short end of the curve, and then more bearish runs at the long end of the curve. And people will watch what happens on Wednesday. So for banks that have liquidity, or people that have liquidity generally, you rather stay on the short end of the curve and ensure that you can get returns higher than the overnight rate, and then wait till what happens on Wednesday. And then investors will have to come back into this market using the last PMA and the Thursday OMO as guidance. So I expect that you'll probably have the numbers probably moderate, where we'll hover around the levels we've seen, maybe 13, maybe 12.8, 12.9 or thereabout. Because inflation is somewhere around 11.1. So when you have the effective yield for your 1 year at 15, that's about 400 basis point positive carry, right? Yeah. So I think people will come heavily for the 1 year. And then if you look at the Q4 calendar that was issued recently, you will see, I think it was on Friday, the 1 year auction is about 800 billion to the 91 days and 182 days. And they are rolling over exactly the same amount maturing. So which means there's preference for the 1 year. So people will come out heavily on the 1 year. So I expect you'll have If there will be a change, it will be very moderate. Maybe we'll close around 12.9, 12.8, or perhaps 13%. But the mid and the short end of the curve, we expect to see some bullish ones as people just hold their liquidity and watch the market.
And watch the market.
For bonds, I think the PFAs are beginning to come back into the market and selectively take maturities that are quite interesting for them. Now, there's a lot more happening around the 27s and the 28s, which signals that they are not going for the typical 20-year like we know the PFAs do normally, but they're staying around the mid end of the curve, which is about 10 years. Now, to my mind, why would they want to do that? Because typically, it's either the structure of their portfolio has changed, and then the age distribution would have changed, which I doubt.
Based on the multi-fund structure
exactly,
that they did, okay.
Which I doubt, or you want to get higher returns with very proper risk managed portfolio. Because for your 20 years, when you play the duration game, the risk you run is any move upwards or downwards will increase the volatility in your portfolio. So if they want to manage that portfolio, they'll probably be a lot more cautious around which of the maturities they want to put into their portfolio. But how well we get the PFAs back into the market will determine to a large extent how much of demand will flow into the bonds market and some correction. But generally, the sentiment is that we'll probably get to 15, maybe 15.5, probably hit 16.
Well, that will be interesting to see. On the final note, we have about 20 seconds left. FX market this week, we saw a bit of pressure on INE window last week. Do you expect that to continue?
I think the pressure has been there for the last 5 weeks, 6 weeks, maybe 2 months, right? Why? Because you're having less inflows into that market, right? And then with the FPIs pulling out some of their funds, and you see the impact in the reserves, we are not growing, which effectively means that...
But lucky for us, oil prices are still above $75
Yes, but we're not accreting a lot into the reserves, and we're depleting the reserves.
Okay,
that's
because of the weekly interventions.
But I think CBN will be able to manage it.
Okay,
we're not in the heat of the efforts.
No, we're not. Thank you so much, Uche, for talking to us today.
Uche
Ugboh, Head Asset and Liability Management at Diamond.